Alright, all you Forex traders out there, this is video number 2 in this series, How to Trade Forex in 3 Easy Steps. And I'm your host, Josh Taylor. Okay, guys, this video is going to be short here, but what I have here open is a Euro USD chart, and we're going to show you how to find optimal entry points, stop losses, and where to pull your profits out of these trades, okay? So let's talk about the 3 steps trading Forex in 3 simple steps. Step number 1. Proper equity and risk management. You want to make sure to stay in the game. You do not over leverage your account, and don't don't risk too much of your capital on one given trade at one time. And we talked about in video number 1, we talked about the risk to reward ratios as well. Okay. In this video number 2, we're going to talk about optimal trade entry. Once you understand how to manage your capital, all right, we're going to show you how to not chase the market and how to wait and be patient for the market to take you into an optimal trade opportunity. Okay, that means we're not just going to jump in. Here, I'm going to tell you folks right now, 90%, you want to start winning in Forex? You want to start being in the top 10% of the people who are trading Forex that make a profit? You follow these 3 steps. Number 1, proper equity management rules. You blow everybody else out of the water just on that alone. Number 2, don't jump in the market just because you get on some forum and read that everybody's buying the euro, so you just jump in and start clicking buttons. All right? You wait until for an optimal entry and exit point to get into those trades. And that's what we're going to talk about in this video. And number 3, we're going to talk about on the next video, we're going to talk about how to manage the trade once you're in it. Okay, now this is really cool, and all 3 of these videos are going to tie together. So anyway, let's talk about the Euro USD. Let's look at optimal trade entry points. Now this is a Euro USD daily chart, and I pretty much only trade the daily charts. I only trade swing trades. I used to when I first started trading. I've been trading for 7 years now. And when I first started trading, I traded off of 5-minute charts, 15-minute charts, 30-minute charts, hourly charts. And in one day, I may take 30 or 40 trades, and I was losing money. I blew through accounts left and right. I started off with these little brokerage accounts, and I'd wipe them out. Within a few weeks, I thought I was playing around. I didn't realize how serious this market was and what the true potential was. And I had to go through a lot of ups and downs for me to realize that you have to be patient, and there is a way to doing it the right way. So let's talk about, I trade off these daily charts, and it's very easy to see. Folks, any kindergartner can draw out lines. So that's what we're going to do today. We're just going to draw out some trend lines. And not trend lines, but maybe some trend lines. But mostly support and resistance point. Now, we have in other videos. If you don't know what support and resistance is, then you're definitely a newbie. And I would suggest going through all the videos on our YouTube channel. And there's a bunch of videos in there to explain support and resistance. That support and resistance is basically like ceilings and floors, okay? And so we're looking for basically what you call a confluence of events, a certain area on these charts that the price seems to stop or hesitate or have a difficult time breaking through. So let's draw some out. As you can see here, I got a little line. This area here, right, is solid. See this area here? See how price came down and rejected, rejected, finally broke through, and it's hesitated in this area a lot. Okay, so that's a support and resistance point. That is good. It was support here, the floor. Once it broke through the floor, it becomes the ceiling, right? Support becomes resistance, resistance becomes support. And if you zoom in this chart here, you can see over the last 3 months that this pair has been really running in what we call a channel. Now, 80% of the time, the currency pair runs in a channel. Okay, now you can see how price keeps coming down to this area, this area. This is a really good opportunity. But what I did notice was that price seems to come down into. If I knew that if I put the my buy position right at this line, that there's a chance price might come down like it did here. It could go back up. Now, eventually, it broke down, but we may have missed a trade. All right. So what I put here, I like to bump it up a few pips to like 30.35 right here. Okay? Is it? I can't read it. There we go. 30.35 right there. Okay? Now, we're drawing out these support and resistance points. You can see here, right here, price hesitated over several days there. That's a nice resistance level. There's a nice resistance level. So what I did is I've been trading this range on and off for the euro for several months. Okay? Which means I sell at the top of the range, I buy at the bottom, sell here. Buy. Now, what we do is we take the data that we've had over the last several weeks and several months, and we are looking for great opportunities to buy and sell these currency pairs. Now, here's what I see. If you were, let's say we're right here in this area here, okay? And we already have seen historically that price here, here. This is a major support and resistance point, okay? Right in this area. That we would love to take a trade in this pair if the price would come back down to here. All right? So what we do is we know this is a good entry. Okay? We need to buy at the bottom of the range as close as possible to make sure we don't get stopped. You never, if the price is here and all of a sudden you read some news report and the euro starts going up right here, you see that? And everybody starts jumping on, oh, I'm going to buy the euro. You would have gotten stopped out. You would have gotten hit. You would have taken a loss. You want to buy at the very near the bottom of the channel. And again, one of my rules that I tell in almost every video, I need everybody to get through their head. This is very, very important. That 80% of the time a currency pair trades in a range or a channel. So I know that if price is coming down, historically, this thing has a huge opportunity to bounce up. Okay? So this right here at 3035 was a great buying opportunity. Okay? There's our entry point. Okay? Now, when we go back to video 1, in proper equity management, we tell you always trade with a stop loss. Never trade without a stop loss. What's a stop loss? If this pair decided not to bounce up and kept blowing through, you don't want those runs to be unlimited. You don't want your losses to be to basically wipe out your account. You want to say, if price came down to a certain point, then this trade is no longer good. I need to get out. And back to our equity management risk ratios and that we talked about in video number 1. So let's try to find. We found that this is a good place to get in a trade. But let's protect ourselves before we get into the trade. Where are we going to get out at a loss? How are we going to hedge our losses? By cutting the losses early, by putting a stop. So you can see a couple of different levels. On this range over here, you see that? How price had a really difficult time rejecting off of this area in here, and here, and here. And see this candle here, and this candle here went up. So this area at around 29.66 is a solid area that price has had a difficult time rejecting. So one, we already have to it had to blow through our current support line. A few pips is okay, but then we want to make sure it has to blow through another support line to make it even more difficult. So right around this range here, I would say 29.35, almost 100 pip stop loss. It is 100 pip stop loss. We got in at 3035. We want to put our stop at 29.35. Okay? That's a 100 pip stop. Now, if you look at our risk to reward ratio, we'd love to see at least a 1 to 2 risk to reward ratio. So if we have a 100 pip stop loss, we hope this pair can go up almost 200 pips. All right? And you can see here in this area that price could easily run all the way back up to the 3400 mark. So we're going to put, because historically this pair lately has been coming all the way up into this range here at 34.870. So we're going to cut our losses, our profit a little early. Say around 32.60. We'll pull, I'm sorry, 33.60 is we're going to be our profit. Now let's color this green. Oops. We're going to color our entry point blue. Let's do that one more time. blue, and our stop was, actually, I apologize for that. That's supposed to be white. That's the old one. Okay, that's just another level. This is blue, and this is our stop. So I've got another line drawn in here, and you can see, oops, I don't know why I keep doing that, that price also had an area here that price seems to hesitate off of too, right above the 3200 mark. So what is this going to be? What is this green line? I mean, what is this line? This is going to be another green, and this is going to be our profit target number 1. So what we're going to end up doing is let's talk about our risk to reward. Our risk to reward is 100 pips. We're looking at potential almost 300 pips. Okay, 235 pips. So more than about a 1.1 to 2.3 ratio, really good ratio. And we'll end up pulling profits here and pull profits here. Now in the next video number 3, I'm going to explain how we're going to manage this trade. Okay, but in here I just wanted to show you how we choose proper entry and exit points. Okay, so now if you're, same thing. Now we're currently in this trade at 30.35 here. Again, we got in this trade again. Price came all the way down, touched our entry point, and is up right now. We're at 3098. So we are 63 pips in positive. Okay, and so that's one way to entry. Now let's go look at another chart. And I'm just doing this on the fly, folks. Okay. This chart's a little messy. And I've got a lot of stuff I'm trading this trade pair. I don't want to knock off all my charts. Let's look at the Aussie. Now let's not look at the Aussie yen. Here's an easy one. Here's an easy one, nice and clean. The New Zealand dollar, U.S. dollar daily chart. Now you can see that price was running in a channel here, and a channel here. So here's what we're going to do. Let's delete all the lines. Let's delete all. And let's start drawing some pictures. Very easy stuff. All right. So over here, we can see that this is a concurrent area of the top of a channel, right around 32.57. Okay, so we're going to bump it down a little bit lower to make sure we get into a solid trade. And we are going to move the bottom of this channel has been tightening up. If you notice, I'll show you here in a second. But I would say right around 21.27. And if I draw out, now watch this, you can see that this thing is beginning to trend its way back up. You see that? That the lows are getting higher. Higher lows, higher lows. Eventually this pair is going to go back up. Okay? But it's kind of in the consolidation, so we can trade this range. So here's what we would do. We also see that price has many times come all the way down into this point here, several times. Okay, we want to protect ourselves on a stop loss. So, and in this range, let's say we're trading, let's say we're looking for buy positions. Okay, so anywhere when price is above here, we would put a buy limit order to buy on this line, which we have an order in right now to buy on this line. We're waiting for price to come down to this line. It takes us in. Now we would put our stop loss at the next nearest swing low, and this is a safe. This could be a swing low, but we're going to be buying on that line, right? So the next nearest swing low is this candle here. Let me get rid of that so you can see. Is this candle here? This candle here, right? This area here. Okay. We know that price could easily come down to that level, so we want to drop down to this point here, and that stop loss would be around 30.38. Okay, and then our profit target would be top of the range. Pull back a little bit more to make sure that, because sometimes it won't go to the top of the range, so around 82.35. Does that make sense? You wait for the trade to come to you. We get in. You put a stop loss at the nearest swing low. See the lowest swing low right here? That was recent over the last couple of weeks, to keep yourself safe and pull out your profits near the top of the range.